Hello and welcome to another episode of the Real Estate Investing Club, the place investors go to gain actionable advice, learn about current market trends, and hear war stories from other professional investors out there in the field today. Before we get started, I have two quick housekeeping items to cover. First, if you like the episode, we would very much appreciate a like, subscribe, and share. It is the best way to support the show and keep it running. Second, if you are a new investor looking to get started in real estate or an experienced investor looking to take your investing to the next level, we created an ebook for you that will cover how to find deals that are actually deals, how to finance those deals with little to no money down, and how to exit those deals for maximum value. On top of that, I throw in an insane amount of free bonuses that you'll have access to once you buy the ebook. All we charge is our admin cost to keep the show running. So, if you're serious about real estate investing and want to create both active and passive income as an investor, head on over to the website at therealestateinvestingclub.com and click on the button that says Get the ebook to grab yourself a copy today. So with that said, let's dive right in. Today we have a very special guest with us, ready to drop some investor knowledge on you. So buckle up, grab your pen and paper, and enjoy the ride. All right. Welcome back to another episode of the Real Estate Investing Club. Today we have Lior Rozhansky with us, all the way over from Boston, right, Lior?
Boston.
I'm getting all these things mixed up, man. West Coast people, we don't know our East Coast. But Lior is from Floral Capital LLC. He is a master at multifamily. So I'm super excited to have him on here. Lior, thank you very much for hopping on.
Thanks for having me. And we definitely don't associate with Baltimore down here. So it's a good thing we got that correct.
That was a no. That was my bad.
Yeah, it's all good.
All right. Well, hey, I told you before we got on here, we like to start with stories. We like to hear how people got to where they are today. I'm sure you got a good one. So why don't you dive into it? Where did you or how did you get started in real estate in the first place?
Yeah, so for me, it kind of started with a classic immigrant story. You know, we moved here to the States when I was like 8, 9 from Israel. You know, parents wanted me to be a doctor or a lawyer. That was kind of drilled into my head, basically from the get-go. You know, that's really the only way to be successful, right? So I ended up doing pre-med in university here. Actually took the MCAT. And basically decided to take like a gap year job before applying to med schools. So I actually ended up taking a role in a management consulting firm. You know, and that's there. I kind of worked brutal hours, 50, 60, 70-hour weeks. Just, you know, I kind of saw what it's like in corporate, right? Where you're just slaying away at hours, but you don't really have time to like think what you're going to do for yourself, right? I mean, you're just always so busy, either traveling or doing work. You know, so I try to give myself some time to like figure that out. Did some, you know, I took some time, try to do some research on other wealth things that I could do for myself, right? You know, so I played around on the stock market, stuff like that, but I quickly realized I wasn't going to be the next Warren Buffett, like very quickly.
Right there with you,
and
man.
Yeah, right. Like most of us, I feel like we have that epiphany. And what was funny was, you know, I had 2 buddies at the time that were in the construction industry, and they were talking about buying a place, right? Or buying a piece of property. And I was like, well, you know what? I mean, maybe real estate could make sense, right? I mean, you know, I've got another year before I go to med school. Maybe I'll just buy something and see how that goes. So I decided to buy, right? I really knew nothing, didn't know anything about business, real estate. I mean, I understood the basic concept, like, hey, I can buy something, it can maybe produce some income. You know, I really like the Boston market. I understood it was a growing market. So I was like, hey, why don't I just dive into this? So bought my first property. And then from there, you know, as soon as I closed, I thought I was an absolute genius, right? So I decided to jump into the development game. As I was kind of exiting the corporate space, decided not to apply to med school. I thought I was going to make $1 billion developing property. And again, quickly realized that's not the case, right? I mean, you know, what I quickly saw was it's very similar to corporate, right? You're basically trading your time for money. It's just as stressful, just the same 50, 60, 70 hour weeks. You don't really have a lot of time to do other things. And, as soon as I got out of those projects, there were great learning lessons. I really narrowed down and understood like, look, multifamily and buying rental property was the way to go, right? It's something that's scalable, something that allows you to build income on the side, and builds your wealth at the same time. So that's kind of how I kind of got into the multifamily trajectory.
Cool, man. Your story kind of mirrors mine quite a bit. I was in management consulting too, and I was just like, man, these hours are brutal. So I got to figure out a way out. But it sounds like you're an immigrant family, so you guys are. Everybody who's an immigrant, they have such good work ethics, and so I'm sure that really helped you along in your journey in real estate. When you decided to get into real estate, what was that first property that you bought? What kind of property was it?
Yeah, so it was a 3-family around Boston.
Okay.
And I tell even today I still buy those because the bulk of Boston's inventory, it's a very old town. We don't have huge apartment buildings here like you might have in like the South or Southwest or Midwest, right? A 20-unit building here is like a huge building. So I bought a 3-unit building. And again, kind of from the beginning, my rationale for the purchase was, look, I want to buy in a growing area. Like I didn't understand much, but I understood that because I knew that if I bought in a place where there's going to be demand today, where there's going to be demand in the future, where I could see there was growth through infrastructure and development, I saw it as like a hard to lose proposition. So that's kind of what made me pull the trigger on it.
Absolutely. Growing with a population, positive net migration. That's what you need to look for. Obviously, even shrinking cities, you can make good deals. Detroit, I'm sure there's still good deals to be had. But the one key you want in real estate is positive net migration. All right. So you got that 3-unit, and then from there, you jump straight into development. That is something that I don't often hear. Why did you decide that development was the next step for you?
Yeah, I bought that first property kind of looking at the numbers and, the cash flows. And I thought, well, I can look at numbers in development deal and it'll be just as easy, right? So I penciled out, I'm a numbers guy, I penciled out the numbers. And I was like, wow, like you can make a ton of money. Why don't we just do that? And again, quickly realized that's not the case. I mean, development is a whole nother ball game, completely different ball game, right? And it's the same thing, right? I mean, it's lucrative, but you're directly trading your time for it. I mean, you have to be on site every day. You're not creating that additional income streams, right? So it didn't really solve a lot of the issues that I originally had when I was in kind of in corporate America. So that's kind of why I decided to move away from it.
You were looking for cash flow, not lumps of cash.
I was looking for cash flow. I think I was looking for 2 things. I was looking for something that would help me build wealth in the future, right? I think that was actually priority number 1 for me. And like I said, I don't like investing in the stock market. I didn't really believe in my 401k. So I needed a vehicle that I could sit on over a long period of time that I truly believed in, right? And obviously, the more I studied real estate, the more I kind of understood the value of it. So actually, it was really that wealth generation was number 1. And then the second was, having that additional income stream was, of course, also, fantastic.
Yep. So since then, your foray into development, you have gone into syndications, which is something that's actually I'm just getting into now. Every deal I've done up to this point, I've only had 1 or 2 investors with me, but now we've decided to open it up to other people. And so this is a new world for me. How did you decide to get into syndications, and what was the kind of the process that you went through for that first one?
Before we continue on with today's guest, I want to tell you guys about a community I'm launching on School to help investors like yourself grow your own portfolio. In this community, you'll get access to all the docs I use, all the systems I've built, everything I've used to grow my own portfolio, as well as instructions and guidance on how to get out there and find great deals, how to finance those deals, and then how to manage them for great returns. Since we're just launching it, the price will be set at a measly $20 per month, and whatever price you join at is the price you'll have for life. We will be increasing the price as the group grows, so if you're at all interested in growing your portfolio along other investors, now is the time to join. I will put the link somewhere in the bio or on our podcast website at therealestateinvestingclub.com. So if you are interested, head on over there. With that said, let's get back to the podcast.
Yeah. So what I basically did from there was, again, I understood that I didn't know everything in the business. So I ended up partnering actually with my broker at the time. I got licensed. And my broker at the time was starting to buy up a lot of multifamilies around the Boston area. And I kind of just found a way to provide value to his operation and essentially was started helping build it out, right? So we were able to raise money. I mean, we were buying small multifamily, so it's not like we were raising money from like 15 different people for these deals. Most of the times we had anywhere from 3 to 6 or 7 investors per deal. That was kind of our average. But yeah, that's kind of the step we took on. I kind of helped a lot with the raises of the money, with the financial analysis. I kind of that was kind of the value I was able to provide, and together we were able to kind of hit the pedal and really scale out and buy quite a bit of buildings over the last, over 3-4 years or so.
Nice, I love it. And you guys are strictly focused on the Boston area, right?
Yeah, I mean, even today, I'm strictly focused on Boston. I mean, I have plans of potentially expanding into the South, Southeast in the future. I think my rationale today is I really want to build out a high quality shop first in Boston, and really nail down like the structure, the number of people, the types of people, the systems, the processes, right? That's all in development today. And once I really nail down that, then I'll kind of feel comfortable maybe expanding into one other market, right? Because one of the things I see a lot of syndicators do, which is good and bad, is they own product over 5-6 different states, right? And that's great from a diversification perspective, but we all kind of know that in real estate it's neighborhood by neighborhood, and a lot of times it's street by street, right? I mean, Boston, like you buy a building on the wrong street, you're going to lose a lot of money, right? So it's really getting to know and becoming an expert in one marketplace. So that's why I've really prioritized building it out here. I'm also a huge believer in Boston. It's a Class A market. I think it's going to be here in the future. It's super resilient. So that's why I want to build everything out here. And then, in the future, I can kind of evaluate the opportunity of potentially going down south.
Yep. I love it. Yeah. Building the systems is definitely, that's where you really start to see the returns, and the security is just mastering a specific market, getting your team up and running and working, well-oiled machine. What are the main roles that you feel have really contributed to your business to allow to be automated and expand within the Boston area?
Yeah. I mean, I'd say, from an operational perspective, some of the things that some of the roles I've hired in the past and I'm hiring again, has been construction, right? So a lot of my deals are either light or heavy value add. And in Boston, it's different than a lot of other markets across the country, right?
Yeah, I mean, the houses are built in 1700, right?
Yeah, right. Like you're dealing with old inventory. Our construction prices are also significantly different, right? Like I talk to syndicators in the South who are telling me they're doing value add and they do it like 10-15 grand a door. And I joke with people here, I can't even get out a trash guy for 10 grand, right? So, my average construction budgets here are probably like $50,000 to $100,000 per unit. So we're doing a significant amount of work, right? I mean, we're really, my philosophy, especially over the last, I'd say 12 to 24 months, has been to create standout product in standout locations. So we do heavy work, really create strong product that can often compete for top dollar rents. It's obviously not brand new construction or anything like that, so I'm not competing with the developers, but in terms of existing product, like it is, I'm trying to build out some of the top line inventory to really stand out.
And are you guys buying in kind of workforce housing areas, or are you doing more of the top end luxury-ish units?
Yeah, that's something that's also shifted over the last 12, 24 months. I'd say when we first started, first 3-4 years, we were kind of looking at, I would call them Class C, maybe lower Class B locations around Boston. Don't get me wrong, I was still very high and still am very high in a lot of these places. I mean, they're changing every day. But they were certainly, kind of the lower end in terms of locations. And then the last 12, 24 months, I mean, I've really been conscious about trying to buy in better locations. So high class B and even class A locations today. Because I really want to play and own inventory in just standout locations, right? My pitch to all my capital investors every time I go in a deal is, look, obviously we can exit a deal in 3 or 5 years, but every time I buy an asset, I look at it from the perspective of what happens if we have to own this for 10, 15, 20 years, right? Is this a building that is going to continue to command demand well into the future, right? So I would rather pay up buying just the strongest possible locations. Some of the buildings I buy today are within like a mile of like Harvard, right? Like Harvard University or MIT, and it's like those places are not going anywhere. So I feel very, very good that, these kinds of locations are just going to be resilient no matter what happens in the economy.
Yep, absolutely. Location is the number one thing. And I actually had to learn the hard way that you really do need to know the specific metro that you're dealing with, because as you said, every single street, it can change very quickly. And even if a larger metro, the city has good metrics, high, low unemployment, positive net migration, all that stuff. If you buy on the wrong street, you might be buying a bad deal. So you definitely need to know specifics. All right. I just took a peek at the clock. Does look like we've gone through our 15 minutes. So it's time to jump into the quick question round. Are you ready?
Let's do it.
Let's do it. Starts with books. I'm a big bookie, so give me 2 recommendations, one for general life wisdom, one for real estate specific.
I like that. So real estate specific, I actually just finished up the E-Myth for real estate investors.
Oh, interesting.
I really like that one. I thought it provided a lot of value, especially for, if you're kind of in the midst of like hiring or anything like that. I would strongly urge people to read that. It kind of reinforced for me like the way to build the systems and processes. So that was great. And then in terms of life wisdom, since I've been asked that, I would actually go with Matthew McConaughey's book.
Nice.
Green Light.
Green Light. There you go.
Green Light. Really good book. I mean, just like you would never think about it, but like the experiences he's had, and the way he was able to kind of transform, kind of go through these different experiences is it's an unbelievable story. And really, I actually took quite a bit of like life lessons away from that. So it's a really great read.
Dude, Matthew McConaughey for president. Let's see that.
Yeah. He's got my vote.
All right, moving on. This next question is for your younger self. If you could go back to the Lior who was just getting started in real estate, let's say he was just working in that management consulting firm, looking at that first deal, go to him, look him in the eye, give him one piece of advice moving forward. Whoop, you cut out there, so say it one more time.
Oh, I said scale quicker.
Quicker.
Yeah, I think that's the biggest thing. I spent the first 4 years. We did good. We bought a fair amount of buildings, but oftentimes it was just me and my partner, or maybe one other person here or there. But I could see it today, right? If I was able to stick the right team behind what we were doing, I mean, I could have quadrupled or even more this business, right? So scale quicker, bring on people more quicker. I think that's the key.
Absolutely. And I've said this before, there's actually safety in size. I know it's so tempting to think that $100,000 property, you're exposing yourself less, but you also have a smaller cash flow. And that is what keeps your building safe, keeps your business safe, is being able to dip into that cash flow when things go wrong. So these smaller properties, they are not it's not the place to start. You want to scale quicker. You want to go bigger. Just like Lior said. Love that. So moving on to the next question. This one is the United States. It's a big place. A lot of opportunity out there. Give me one metro that you are most excited in investing in today.
I got to stick with Boston, man.
Boston.
It's kind of like I said, I really want to invest in the best markets, right? I I'm a big believer in not chasing cash flow, right? I know a lot of operators and investors look for that, and sometimes I think it takes them to questionable areas or markets. So I really want to play a long-term wealth and equity game. So for me, it's how can I invest into the best possible markets in the U.S. Honestly, my biggest regret in COVID was that I didn't go buy real estate in New York City, right? So if I can expand into New York City, I would do that too. But buying in established markets, Boston, New York's, the LAs of the world, there's a reason people pay up for those properties there.
Absolutely. All right, this next one is your Superman strength. We are all gifted with strengths that we uniquely can give this world. So what is your Superman strength? What are you good at?
Oh, that's a good question too. I would say probably this is going to sound a little funny, but I can take it to the chin really well over and over again. That's probably my number one thing,
Hey man, there's some boxers that that's just what they're good at is getting hit. So I understand it.
Look, I mean, I feel like every day I see like a new curveball or something that I didn't expect, didn't see. And just being able to work through that, being able to figure out, okay, like assess the situation, figure it out, take the hit. How do I recover? Where do I need to go next? Right. I mean, I think it's in any business, right? It's not obviously not only real estate, but it's such a critical skill. And honestly, I'd say that's probably one of my best things, right? Like, I think that's one of the things that's helped me grow at this pace I have, because, things happen, life happens, crap happens, and, I can just roll right through it and keep on going. So.
And the thing about shit hitting the fan is it never happens where you think it's going to happen. It always comes out of the work and you're just like, wow, did not expect that. So that is definitely a strength.
It never happens how you think or where you think. Like, it's always going to surprise you. And that's what you got to be resilient. It's key.
Absolutely. All right, moving on. None of us are islands. We all stand on the shoulders of giants. So who is a mentor who has contributed to your career, and how have they moved you along?
That's a good question. I don't think I would say I have one mentor necessarily. What I do is I like to study up from the biggest investors, past and present, and kind of really try to figure out what they're doing, right? So, and that's kind of actually one of the reasons why I felt very comfortable investing in a quote unquote expensive market, right? Like Boston, because I saw, that a lot of the wealthiest people, they not only invested in real estate, but they own real estate in cities like New York, Boston, LA, right? It's not like they're necessarily buying houses like you said, like Detroit, right? Or anything like that. Obviously, BlackRock and Blackstone, they might have other philosophies on that and they're acting on it. But in general, that's kind of what I've studied and learned, and really try to mimic that in my own investing philosophy, right? Like, how do I buy the best quality assets in the best possible locations? And I picked it up from many different people.
Yep, absolutely. All right, that moves us on to the very last question. This is for the listeners. You've given us a lot of good advice. I'm sure people want to reach out and say hi. What is the best way for them to do that?
Yeah, I'm very active on Instagram and LinkedIn. Feel free to DM me, hit me up on LinkedIn. I'm very active. So please DM me and I'll do my best to help out.
All right. And I will put those links in the show notes for LinkedIn and Instagram. So if you guys want to reach out to Lior, just click a little more in the description. It'll pull down the full description, and in there you can find the links. So that wraps it up. I appreciate you hopping on the show.
Thanks for having me. It was a blast.
Absolutely. And for everybody who's here with us today, thank you guys for showing up. You are the reason we do this. So if you guys have any questions whatsoever, reach out to me, Gabe with realestateInvestingClub.com. Other than that, hope you guys have an absolutely fantastic week. Keep rocking real estate, and I look forward to seeing you on the next episode. All right, before I officially sign off, I have a quick announcement to make. If you're interested in becoming a passive investor in one of my deals, my own company, Kaizen Properties, is looking for capital partners for our upcoming projects. We invest in what are known as recession-resistant assets, mainly self-storage facilities, mobile home and RV parks, and industrial properties. If you're interested in investing and would like to learn a little bit more about my company, our investing criteria, and some of the previous projects we've done, go to the Real Estate Investing Club podcast at therealestateinvestingclub.com and scroll all the way down to the bottom of the page. Click on the Invest With Us button. That'll pop up the investor form. Fill that out, and we will reach back out to you as soon as we can. Or if you prefer a little bit more of a personal touch, you can reach out to me at gabe@therealestateinvestingclub.com. So really, that is it. Again, it was a pleasure hanging out with you guys during this episode, and I look forward to seeing you on the next episode.